Welcome to My Money Mindset podcast, where we explore how a healthy mindset is the foundation for financial success. Each week, we delve into mindset hacks and practical strategies to help you enhance your income, help you make more appropriate investments for yourself, and to improve your overall financial well-being. Join us on this journey to transform your financial future by transforming your mindset. Please note that the information provided on this podcast is for general information purposes only and does not constitute as personal, financial or health advice. It has been prepared without considering your individual objectives, financial situation or life needs. Before making any financial or health decisions, you should consult with a qualified professional or financial advisor to ensure the information aligns with your specific circumstances. So let's begin and enjoy this journey as each episode teaches us on how to improve our overall mindset that it overall improves our financial success. Hello everyone and welcome to another episode of Money Mindset. In this episode I wanted to discuss about how parents or mentors of us, a general rule of thumb as in people that are sort of somewhat more experienced than the younger kids or trying to get into the property market would do, and how would they tackle the disheartening notion of not being able to afford something as in a property. How do they deal with that, and what to sort of look for as in to fix and help people that are trying to get into the property market. So it's pretty much a day in the life of what I do every day, and that is not just finance brokering but mentoring and making sure that people when they find that they've been declined by banks or they can't afford to do as much as an investment and they want to start to grow in financial wealth, but they're sort of inhibited due to certain factors in life, what do we do and how do we help people? And I think this is going to be an important episode to sort of somewhat lend a helping hand and use our ability of wisdom and experience to help those that are trying to, make something of their life and create that beautiful continuity of assisting those and hopefully helping them to move on to bigger and better stuff. So it's the most disheartening thing to have like a loan application declined, and I'll probably oscillate it around having a loan application decline because most of the time we all know what to do when it comes to buying an investment property, and it could mean that we're saving money and going through life and doing what we've got to do, but we all sort of build the resistance and we tend to save and we work harder and so on and so forth. But then sometimes life does happen, and sometimes our credit files get in the way, where there could be experiences in life that cause us to make silly decisions or decisions that we don't want to do, but it may cause a bit of heartache and it ruins our credit file, etc. And also sometimes we don't know what we don't know, and we approach a bank believing that they're there to guide us and help us with all the marketing that they put out there, and all of a sudden we get declined, right? So as a mentor, my role is to sort of provide guidance and support to sort of help these people understand the reasons for the rejection and develop sort of strategies to improve their chances in the future, right? So it's not just about, well, let's move on to the next bank and try another one or so on and so forth. Let's try and break it down, see why you got declined by the bank to apply for a home loan or investment property or something like that, and break it down into more manageable techniques that we could develop into your life to make sure that it's not going to be declined in the future. So the first thing, I suppose, for any good mentor is obviously active listening and empathy, which is pretty much standard in a day of life. I believe that anyone wanting to improve their life, that active listening and empathy is probably the most important thing in life, in communication, right? And then once you do enable active listening and empathy into your life, you want to sort of start to understand the reasons for which the bank declined the loan, right? So I really want to probably, what I do most of the time, my approach is to I probably know the bank or have used the bank in the past as a broker, and I would probably anticipate and know the rules and regulations there to be able to help. But identifying where the bank sort of said that you can't afford it is most important. Could it be a credit score? Could it be the debt to income ratio, as in, you're trying to borrow too much debt in lieu of your income? The deposit amounts, is it your income stability? Things like this do affect it, and also property valuation. Is the loan that you're trying to get suitable for you? Did the bank or the banker that advised you of this home loan, did they actually just put you into the cheapest loan and hope that you got approved and then didn't apply any more information? Was there a lack of information that was provided by the bank? So most of the time in these instances, I can break it down and really read the room to understand, hang on, what's going on here, and find out why you got declined, and then move forward with that, right? So when I moved forward and I sort of created a strategy, most of the time, if it is a credit score report, that the credit score is not great, or you've got a bad credit report or anything like that, the improvement of that. So before we do anything, we start to improve. And there's certain factors in a credit report. Don't think that it's just a sort of, tick and flick and hopefully one day they'll fix it up and time will heal all wounds. Most of the time with credit scores, things can be done. So we can improve them, and don't think that you've got to wait another 6 to 12 months and all that sort of business. There's a lot of talk that you say, most of the time will heal all those mistakes. But in a lot of the time, when it comes to finance and banking, there are certain procedures and strategies that you can implement to sort of help you move forward faster, right? So debt management's another one, apart from just reviewing a credit report. Debt management is something, we need to discuss your strategies for reducing your existing debt, how you're paying those debts that you got off, sort of prioritizing paying off the higher interest debts, and then sort of exploring debt consolidation options that we can also get a larger loan to encumber the whole debt. Now, a lot of people say, well, why would you bother doing that? Well, sometimes with debt consolidation, you're actually providing a better solution, as in one loan. If you've got, let's say, 4 or 5 little personal loans and credit cards and car loans and stuff, you amalgamate it all into one. That's a lot lower on average repayment, and that also helps. And also just making sure that the people that we're mentoring, is we emphasize the importance of paying the bills on time and avoiding sort of new problems on your credit file. So most of the time, if you don't pay your debts, sometimes it can read bad on your credit file with telcos. It could be the bank itself, it could be electricity bills, that sort of stuff, right? Now, also, if it's debt to income ratio, what I mentioned before, that when a lot of the time when the bank assesses your income and then they assess the debt that you're opting to apply for, they sort of explore, different banks explore it differently. So some will provide a higher debt to income ratio, meaning you may be able to borrow more on your current income. So that could be something that you either change a bank or you increase your income, of course, naturally. And we discuss what's going on with your income there. The other thing is also, like I said, when it comes to debt to income ratio, it's to reduce the debt. So as I mentioned before, debt consolidation can often help with that, and prioritizing with the higher debts and knocking them down faster. Savings plan is always good to make sure that even though you're knocking down those debts, that you've got a savings plan in. So if it means that it costs you $1,000 a week to live type of thing, you can actually start to save. As opposed to $100, can we cram it down to $200 saving, if not more, that sort of stuff. How do we do that? Do we minimize certain things that, reduce our phone bills or reduce our electricity bills and that sort of stuff, right? So exploring alternative deposit sources that we can sort of find out that, can we get a guarantor to go on the loan? Are we able to borrow other money to place on the loan to apply for this home loan? That sort of stuff. Now, I don't always encourage getting a loan as a deposit and then placing it for a larger deposit. I always tend to think that what I'm actually mentioning in this episode today is about learning how to cultivate and save money more than just jumping into more debt to get a deposit to buy another property and get yourself into a larger sort of loan. So just because we're going for a loan doesn't make it a good thing, and it doesn't mean that we should encourage it with a smaller loan as a deposit to get a bigger loan type of thing. Sometimes it works for investors and stuff like that, but you really got to base that based on their individual circumstance, and if they can afford it. Most of the time it all comes about affordability and pressure testing it as in interest rate. So if the interest rate today is 5.5 or 6%, I would always base my numbers on 7% to 7.5 in my mind to know that I can afford it. And just in case there's also rate hikes when you've actually got this loan, right? So you know what you're doing. And obviously increase your income in accordance as time allows you to. So when I was speaking about getting a loan as a deposit, probably the best way if you're trying to get into the property market, I did an episode in regards to getting a guarantor loan. So guarantor loan just enables you to enable, let's say, your parents to provide their property as security to provide as a deposit for the next purchase of your new property. Now we go down to sort of discussing from that is we've got to make sure that when we have got an income coming in steadily, it may not be enough, but is it steady or is it consistent? Make sure that your income is consistent. You may be earning a lot of money, but it could be inconsistent money. The bank also look at that. And make sure that if you do have multiple jobs or roles, or they're casual roles or part-time, make sure that you sort of address the employment gaps in your working life. So for instance, if you've got could be a job that is only part-time and it's casual, you may have 2 or 3 part-time casual jobs, but they're not consistent. You want to make sure that the time that you're not working, you can try fill those times. I don't mean to work every hour of the day, but it just means to build a consistency or a regular income that demonstrates to the bank that you got a regular income. And it doesn't mean that you got to be spot on with this. It just means that you got to show consistency. The other thing is also when you get declined is consider other banks. Just don't shoot from the hip and go, well, throw your hands in the air and say, well, I can't get a loan. I've been declined and it's all over Red Rover. No, it's not. It's also consider other banks. Mortgage brokers are great for doing this. Encourage a good mortgage broker to have a look. You could have approached a bank that at that particular time may have been good 2-3 years ago, but at the moment they're really tightening up with their servicing. Don't think that it's a one bank is going to be the detriment of your future. Make sure you shop around. Like I said, mortgage brokers or finance brokers are really good at doing this. Smaller lenders probably, discuss the possibility of considering smaller banks. Don't always think that the big 4 or big 5, that sort of stuff, is where you want to go all the time. Don't get caught up in that brand or that marketing recognition. Sometimes the smaller banks are very, very, very competitive, a lot cheaper sometimes, and also very client focused. As opposed to being this big juggernaut of a bank, they can sometimes go in and it's pretty much, you use the analogy of, let's say, a larger supermarket to a smaller milk bar. The milk bar, you're going to get a lot more pleasurable service. They're going to treat their clients a lot better than what a massive supermarket, which may not have. I'm not saying that that's the way it is, but most of the time, a lot of the smaller lenders, don't be scared to think that it's all about the brand. Don't forget, this is about you buying an investment property or getting into the property market, and this is about your finances, not what the brand of your bank looks like. So always make sure to have a look at that. Once again, finance brokers know everything about that, or they should know everything about the smaller banks, and also provide you with those solutions. Don't always get caught up in the mainframe of always having to go with the big majors. Now, the other thing is too, once we've learnt all this, we want to sort of build a bit of confidence and a resilience to this, as in to say, well, let's get over the fact that someone told you can't afford something, and let's get on with life. Let's press the reset button and move on, and then start to understand what is it that we've got to do here? Put a game plan in place, as I say, strategize. So the points that I've just discussed with you in this episode, implement, identify, and be honest to yourself and make sure, hang on, am I kidding myself? Like, really, am I earning enough income that I believe I can do more than that? Then start to do it and implement it into your life. The fact that you sort of, as a mentor, the main thing here, I think, for any good mentor anyway, for that matter, if your kids come up to you or a friend comes up and says, look, the bank are going to decline me, or they decline me, or they won't give me reasons, I just said it's no good, and you can sort of go back to square one, break the problem down, and as mentors, we've got to reframe the rejection and help view that the rejection is just a learning opportunity, which it is, guys. If it wasn't meant to be, it wasn't meant to be for obvious reasons, and let's start to break that down. So understand that we've got to build the resilience around that, and we've also got to set some realistic timeframes around what we're talking about in regards to getting back onto the tracks and going back for a second chance of not getting declined, and what it takes not to get declined, and what do we have to do that. So, and one of those attributes, behavioral attributes, is patience and persistence. Patience and persistence are just the key fundamentals. Obviously, an open mind, but patience and persistence, not expecting it to happen overnight, and understand that it's a learning curve. That is the key here. And always remember to celebrate the small wins, right? So if it means that your goal is to get a home loan, but the small wins is to save $10,000 every 6 months, and when you get it, celebrate that. Understand that you've achieved that, that it takes these little micro steps in order to get to the bigger picture, and you're rectifying the reason why you got declined, right? Now, the other thing, what I would also do, if you feel as though it's really knocked you about and you can't sort of get over it, and you're thinking, what do I do? This is all too hard. I would always speak to a financial counsellor or something like that, or a mentor, really getting involved with them to sort of, they sort out financial situations that are rather complex. If you think it's really complex, hit me up, email me or whatever it might be. But it's always about, I'd always recommend to seek advice from a qualified financial counsellor, not just someone to say, oh, you'll be okay and this is what you got to do. Have a look and break those numbers down. Numbers are what's giving you that anxiety or depression. Identify that sort of thing. Look at credit repair agencies, that sort of thing. That's, once again, a good financial counsellor or mentor will help you also do that. They put you into the right hands as a credit repair. They could probably do that themselves, as we do. And there's always legitimate errors that could be on a credit file or credit report that can be fixed and will be fixed. Time and a bit of hard work does get those credit repairs sort of get going. They really do a good job of it, and if you give them plenty of time and resources, they tend to do a great job. But that being said, it doesn't mean it's got to cost you the earth. It can be done without costing the earth if you've got a good credit repair agency. And lastly, just the main one is probably government resources. You'd be amazed that there's a lot of government resources. How good are they? Probably I'm not too sure about that. I tend to sort of tackle the issues for my clients myself, so I don't really get involved. But if you're someone there that wants to fix it yourself and want to sort of have a look, your local councils, local government, inform them about any relevant government programs, or ask them, find out what there are around, as in resources available to assist any first-time home buyers or someone that's facing financial challenges. There's a lot of people in this, as in counsellors and stuff within government organisations and local councils, that are free resources and you can use them, right? So most of the time, and look, just to summarise, but what I've mentioned in this episode, if you do use these sort of techniques step by step, you tend to get somewhere a lot faster and better and more efficiently towards achieving an approval rather than a decline by the bank. Just understand, like I said, ask 1,000 questions to your broker or your bank. Make sure that you empower yourself. Not only just wait for your mentor to empower you, but empower yourself through these little achievements, these resources that you do. Understand the decline of why you got declined in the property loan in the beginning. break it all down and achieve those little goals that just help you as a person as well, right? It means if you didn't get the loan, doesn't mean it's commiseration and all that, but it means to break those goals down, keep going, build a resilience, and ultimately that will increase your chances for achieving the home ownership, goal in the future, or investments, or growing your property well. And remember to tailor it to your approach, to your specific circumstance. Don't always think that what your friends down the road did, you implement it to you. Your situation might be different, your income, all these sort of factors are what we just mentioned in the episode. So really break it down into manageable micro goals for that inevitable to the larger goal. Don't think that just because a bank or two have declined you, that it's all over. Make sure to get back on the bus and smash it down as hard as you can, and learn from every experience in life, guys. So I hope this helps. Hit me up if you want to hear anything else in regards to this sort of thing, especially when it comes to declines. It can knock you about as a personality. You feel bad about it, just let me know, and happy to chat. All the best, guys, and have a fantastic week ahead.